Hey everyone, happy Friday, March 13th. It's about 9:45 in the morning on the West Coast, and it's time for another market update. We are unfortunately dealing with the same situation we were last week when I spoke to you, and that's the war in the Middle East. Oil prices have continued to negatively affect the markets. I believe a barrel of oil today is at $95. I looked about a month ago; it was about $61. So that's a pretty big increase, obviously, in a short amount of time, which is obviously attached to this war going on in Iran. As we've talked about, everything runs off of oil in this country as far as gas and goods being delivered to places. So it's not a good thing for inflation that this is happening. It's not a good thing for humanity that this is happening. We could debate whether or not it's going to be a good thing in the future as far as oil goes, but right now oil prices are drastically higher, and that is driving everything. Markets, the stock market lower, mortgage rates higher, things like that. So not a good thing, which is bad timing because we were just making a lot of progress with mortgage rates before this stepped up. So got to keep an eye on that, and that is continuing to have a negative effect. Next thing we got, so we got a bunch of inflation data, including today we got January PCE. And the PCE is the Fed's favorite form of inflation, which they normally pay the most close attention to. But again, this is January. This is very dated information. It came in as expected, up 0.3 for the headline and year over year at 2.8%. The core is at 3.1 and up 0.4%. Headline was a little bit softer than expected, but again, very dated information. And January, a lot's happened since January, including what we were just talking about with that war. Next thing, we also got this week CPI, another form of inflation for February. This came in as good as well at 2.4 for the headline, 2.5 for the core. Um, as it says right there, the annual core CPI is at its lowest level in nearly 5 years. However, once again, the markets are kind of looking past both these because this is for February. Now with this war going on, everybody wants to see the March numbers because that's when we're going to first start to see this effect of the war and oil prices, things like that. So because of what's going on, normally what would be very important data and pretty good data has basically been ignored by the markets because bigger things are happening that are having a bigger effect. Next thing we got this week. So we got February of existing home sales. So some home sales numbers, and these came in better than expected. It was supposed to be negative for the month, but it was up 1.7% month over month. It's still down year over year, about 1.4%. We saw, the supply go up a little bit, but this is also the time of year where you start to see more people listing their homes, getting ready for the spring selling season. We saw rates had started to come down around this time, so maybe that prompted more people back into the markets and to list their homes. However, again, could be better. Obviously, rates coming down further as they were would, make more people try to buy homes, more people list their homes, and just more transactions overall. So, good to see it beat expectations, but still, lower than we'd like to see it overall. So where does that leave us with rates? So as you remember, a few weeks ago we had gotten down just below 6. We got to 5.99. Last week we were at 6.14 after all this kicked off. This week today we're at 6.41%. So almost a half a point percent rates have gone up since the start of this conflict in Iran. So again, not good for mortgage rates. War is not good for the markets. As we talked about, volatility is not good. Everybody likes calmness. You can predict things when things are calm. When things are volatile like this, it gets a little bit more risky to put your money in the markets and things like that. So that definitely has an effect on trading. And on my end of things, just don't want to see rates this high. This is, I think the highest of the year at 6.41 now. So not a good direction to be headed. So what do we got on deck? We got the Fed next Wednesday. The Fed meeting ends. At that meeting, they will announce whether they're cutting rates, pausing rates, or raising rates. Right now, it's a 99.5% chance I think the markets have that they will do nothing. Especially with everything going on with Iran, any chance of them cutting rates went away when this conflict started. So right now, basically no chance they'll do anything, but the markets know that going in. Again, a lot of the focus is going to be on this conflict and what happens with oil prices going forward, how that affects inflation, and how that affects things going forward, and how the Fed sees that things affecting going forward, and whether or not they'd be open to making a cut. So, not a good week for mortgage rates. Not a good week for humanity. Like I said, we'd never want to see war and loss of life. So, gotta hope that cooler heads prevail. And if anybody needs anything at all, please don't hesitate to reach out. Thanks a lot, guys.